Hello guys, today we'll talk about journal. Journal is the first and foremost the most basic part of accounting. Journal is what you do when you record a transaction. When there is a transaction, you do make the transaction, come back and record the journal in your books of accounts. It is the first step of accounting. So before we go into journal, we have to know about the types of accounts. You might know of all the types of accounts. There are three types of accounts. There is personal accounts, then there is real account, and then there is nominal account. So what is personal, what is real, and what is nominal accounts? Personal accounts are basically accounts of a person. The person might be an individual person, natural person, artificial person like your entities, and then it can be a bank account. And then for personal accounts, what is the golden rule for personal account? Debit the receiver, credit the giver. For real account, it is debit what comes in, credit what goes out. And for nominal account, the golden rule is debit all expenses and losses, credit all incomes and gains. So what is personal, what is real, what is nominal? I told you what personal is. So what is real? Real accounts are nothing but the accounts that come in the balance sheet. Balance sheet items are known as real accounts. And then nominal accounts are nothing but your expenses and incomes. That is all the items that come in your P&L account. So this is about the real, personal and nominal accounts. So these three are a type of account where everything is classified into these three accounts. Now next, we've just learned about the golden rules of accounting. Now next, there is another approach called the modern rules of accounting. In modern rule of accounting, it is a very simple concept. In modern rule of accounting, there is LIC. LIC here doesn't mean Life Insurance Corporation. It is liabilities, incomes and capital. I want you to repeat after me. It is liabilities, incomes and capital. So what happens? When liability increases, you credit. Alright? And when liability decreases, debit. So when liability, income, capital, any of these three increases, there is an increase in LIC, you credit it. And when there is a decrease in LIC, you debit it. And then we come to EA. Here EA doesn't mean EA Sports Gaming Company. This EA here is expenses and assets. Alright? This is expenses and assets. In expenses and assets, when expenses and asset increase, you debit it. And when it decreases, credit. So when LIC increases, you credit it. When expenses and assets increases, you debit it. When LIC decreases, you debit LIC. And when expenses and assets decrease, you credit expenses and assets. These are the modern rules of accounting. So your accounting, whatever you do, journaling, ledger, your trial balance, final accounts, everything revolves in this and the golden rules of accounting. So these are two approaches. You can select any approach that you are comfortable with. But for CA Foundation in your exams, they will ask you to classify accounts as nominal, real and personal accounts. That classification we will see in the problems. We have problems about the classification of accounts, which account comes where, which account is personal account, which account is real account and which account is nominal account. So next, after this, there is accounting equation. What is accounting equation? Accounting equation is nothing but it is assets minus liabilities is equal to capital. This is your accounting equation. So assets minus liabilities gives you capital. Suppose this is the balance sheet. This is liabilities and capital, and this is assets. You first enter capital, then you enter liabilities. Here, all the assets. So when you remove the capital from here, you will get this equation. Basically, assets minus liabilities is capital. Or you can transpose it. You can play around with this equation. You will be getting this. You have few problems in your material about this. It is nothing. There's no rocket science. This is just simple. You just need to transpose it. Assets equal to you can do capital minus capital plus liabilities, or liabilities equal to capital minus assets. You can transpose and play around with it. It is a very simple topic. So we'll come to that, and then after that we come to our ledger account, journal account. What is journal? Journal is the most basic, simplest form of accounting. You make a transaction, you come back and you record in your books of account. Journal is nothing but a first step, your basic first step in accounting. So you will learn more about journal when we do a problem. There's illustration 5 in your CA foundation material. So first, before we start the problem, what is the pro forma of a journal? So this is the basic pro forma of a journal. You draw this table, and in this table you enter your journal entries. So when you come to illustration 5, let's go to the transactions. And draw, first of all, draw a pro forma. So we'll start the illustration. First entry is December 1st, 2022. Ajit started business with capital. So what will be the journal entry for this? Date will be December 1st. Journal entry will be bank account to capital. So we saw in our golden rules of accounting, bank account is a personal account, right? What do you do for personal account? Debit the receiver, credit the giver. Now here capital. What is happening with capital? Capital is it is a owner's capital. The capital is something you start your business with. So when capital is increasing, you credit it. And the company bank account of the entity is receiving the amount. So you bank account is increasing. So bank account will be debited. Here you need to write the narration. Narration is very important to write in an exam, because in an exam equal marks will be given for presentation. So without this pro forma, if you just randomly write the journal entries, marks will be cut. It is very important for you to write to draw the pro forma, to write it in the correct format and give the narration. Next, what is the next entry? He withdrew cash for business from the bank. So that is December 3rd. What will be the journal entry on December 3rd? What is coming in to the entity? Cash is coming in. He withdrew cash from the bank. That is, there is amount in the bank. He withdrew it to bring it into the business. So cash is coming into the business. Cash account debited to Bank. Cash is a real account. So what happens? For what is the rule for real account? Debit what comes in, credit what goes out. Cash is coming in, so we debit it. And in bank is giving it. Credit the giver, debit the receiver, credit the giver is a personal account rule. So bank is giving the amount. So credit the giver, credit the bank. Write the narration. Next. On December 5th, he purchased goods by making payment through bank. So he made a purchase. Purchase is an expense. Purchase is always an expense. Purchase is an expense and sale is an income. So a purchase is a nominal account. So purchase is a nominal account. What is the rule for nominal account? Debit all expenses and losses, credit all incomes and gains. So purchase account should be debited. Debited. 2. He is paying through bank. So bank account should be credited because bank is giving. Credit the giver. Write the narration. Then the next entry will be December 8th, he sold goods for 16,000 and received payment through bank. December 8th. Received payment through bank. So bank is receiving the payment. Bank is a personal account. Debit the receiver. Bank account. Debited. 2. Sales. Sales is a nominal account. And nominal account credit all incomes and gains. Sales is an income. Bank to sales for 16,000. 16,000 in debit column, 16,000 in credit column. So on December 10th, next entry is December 10th. On December 10th, he purchased furniture and paid by check. So furniture is an asset. Remember, furniture is an asset. Unless and until the entity, the business is a furniture company, furniture is an asset. So what furniture is coming in? Furniture is an asset, it is a real account, it is coming in. So debit the furniture account. And he's paying by check, that is, he's paying through bank. Bank is giving the amount. He has purchased it for 2,500. Write the narration. What will the narration be here? Being furniture purchased through bank. So this is the first 5 entries. Next we move on to entry number 6. On December 12th, he sold goods to Arvind. Here cash is not mentioned, bank is not mentioned. So we assume it to be a credit sale. When there is a credit sale, you use the Arvind's account, that is a personal account. So next is on December 12th, he sold goods to Arvind. That is, Arvind is receiving. Debit the receiver. Debited to bank account. Sales is your income. So income is a nominal account. Nominal account will be credited. For 2,400. Write the narration. Being goods sold to Arvind. Next, it is on December 14th. He purchased goods from Amrit. This again, no cash is mentioned, no bank is mentioned. So assume it to be a credit purchase. So what will be the entry here? Purchase account to Amrit. Because purchase is an expense, it is a nominal account, and debit all expenses and losses to Amrit. The next entry is on December 15th. He returned goods to Amrit 500. So what did he do? We purchased goods from Amrit. Okay. When after we purchased, we returned the goods. We returned the goods worth 500. So it will be a purchase return. What you have to do is purchase to Amrit, whatever the journal entry for purchase is, purchase return will be the reverse of that entry. So on 15/12, it will be Amrit account debited to purchase returns account for 500 because they returned goods worth of 500. Write the narration being goods returned to Amrit. Next, on December 16th, he received from Arvind 2,300 in full settlement. So what does this mean? We sold to Arvind goods worth how much? 2,400. And we received 2,300 in full settlement. That means you have to assume that 100 rupees is the discount that we gave to Arvind. So what will be the entry on December 16th? 16/12. The entry will be bank account because we are getting the amount. Debit the receiver. Bank account is a personal account. Bank account is receiving the amount of 2,300. Next, discount account. Here we are treating discount as an expense because we need to receive 2,400, but we told him pay me 2,300. I'll settle your account. So this 100 rupees, whatever is remaining, that will be considered as an expense for us. For him, it will be an income. For us, it is an expense. 100 to Arvind account. 2,400. Narration. Being Arvind account settled for 2,300 with a discount of rupees 100. Next, he withdrew goods for personal use. Now, when you withdraw cash, it will be you withdraw it from bank. So when you withdraw goods, where will you withdraw it from? Goods you will have with you after you purchase them. So you need to credit purchase account. What is the date? Date is 18/12. Withdrew goods for personal use. So what happens here is drawings account to purchase account. Why did we get purchase account? We got purchase account here because we get goods. How do we get goods in the first place? We buy goods, and then only then we have a stock of goods. From those stock of goods, he has drawn some goods. So from purchase accounts, you credit purchase accounts and you debit drawings account. Worth 1,000. Being goods drawn from purchases. Next, your next entry is on 20th December. He withdrew cash from business for personal use. Now this one will be your 2012 cash account because cash is coming in. Cash account debited to bank account. Bank is giving the amount. Narration. Being cash withdrawn for business use. This is your journal entry till 20th of December. Now next 24th he paid telephone charges. Telephone charges is an expense. What do we do? It is expense. It's a nominal account. What do we do in nominal account? We debit all expenses and losses. So 24th 12 telephone charges debited 2. Now here You can use bank account or you can use cash account. It is up to you. But usually when it is payment, you can write cash account. Writing cash account and writing bank account both are okay. It is an interpersonal account and you can change it. It is no problem when you write like this. Next, on December 26th, amount paid to Amrit in full settlement of 9,450. So if you remember the Amrit transaction, we purchased goods worth of 10,000 and he's making a payment of 9,450 for full settlement, right? We purchased Amrit, the full amount was 10,000, but we also returned 500 worth of goods. So what is remaining here? 9,500. So we need to pay 9,500 to Amrit, but he has settled our account in 9,450. So it is an income for us. It is a discount received, which is an income for us. So on December 26th, Amrit account, it's a personal account, he is receiving the amount debited to bank to discount. Alright, the narration. So Amrit account is settled. Next, on 31st December, paid stationery account debit paid stationery, rent. These are all expenses. Debit. Next, salaries to staff. So salaries account. Debit to bank. Like I said, cash or bank doesn't matter when it is just a journal entry. When it is just a journal, the problem is only a journal problem. Cash or bank doesn't matter. You can choose anyone. Write the narration. Next, the last entry is goods distributed by way of free samples. So free samples, goods of free, we are distributing goods worth of free, that is, goods are worth something. You sell them, you get income. But instead of selling them, we are giving it as a free sample. So what will be the entry be? What will the entry be? The entry will be advertisement expenses. Free samples are nothing but your advertisement expenses. You are advertising your product. Expenses account. Debit. To purchase account. So here 200. And goods worth of 2,000 were distributed as free sample. So this is your journal entry. This is a journal problem. This is how you do a journal. With this we complete the topic of journal entries. And thank you for this. This is it. Thank you for watching this video. Please like, share, and subscribe to Aja Commerce Academy for more videos. Or even better, you can just come and join, and you'll have many such classes. Thank you.